Have you ever entered a trade that seemed to be perfect just for it to instantly go against you? Well, this video is for you, because it's not that your strategy doesn't work. It's simply because you're using your time frames wrong. Most traders tend to stay on the lower time frames, guessing their entries and not having a clear direction on where the market is moving. In this video, I'm going to show you exactly how I sync my time frames so you can get cleaner entries, better timing, and stop taking low quality setups. This process is the exact process I use every single week to find my setups. And if you're not already using it, you're already at a disadvantage. Let me show you what I'm talking about. All right, so before we even get started, you have to realize that each time frame has different structure. The daily has structure, 4 hour, 1 hour, 30, 15 minute, and 5 minute. And I'm about to show you what I mean. So what we're going to do is we're going to mark off this high, we're going to mark off this low on the daily time frame, and then I'm going to draw a line starting here, right? So everything towards the right of this line, where my arrow at? So everything towards the right of this line we just drew, that's the only thing we're paying attention to, from the top, from the bottom, right? So right now we see that the daily time frame consists of 1, 2, 3, 4, 5 candlesticks. We just have 5 candlesticks going up, bullish candlesticks. If I go towards the 4 hour, we see those 5 candlesticks turn into now more structure. We see structure being formed on the 4 hour time frame. 1 hour, we see more structure being formed on the 1 hour time frame. Again, if we go back towards the daily, we see that the daily, just bullish candlesticks. The 4 hour, boom. 1 hour, boom, more structure. 30 minute, boom, way more structure. 15 minute, boom, way more structure. This is the top, and this is all the way towards the bottom. And then the 5 minute time frame, we have even more structure. We have the top, we scroll all the way back down. Yeah, it takes a while because this is the 5 minute time frame structure, right? And all this is found based off of us marking off the high and the low on the daily time frame. So now you see that each given time frame has different structure. Now your objective is to sync only 2 time frames. What do I mean with only 2 time frames? All right, so now it's about how do we sync these time frames together to capitalize on a position. Well, here's the good thing. You don't need to sync every given time frame that you have. The only time frames I look to sync are the daily and the 4 hour. If not the daily and the 4 hour, then the 4 hour and the 1 hour. The 30, 15 minute, and the 5 minute time frame are simply my entry time frame. So I don't look to sync those time frames with anything else. It's just simply for entries. But as far as my daily, 4 hour, and a 1 hour, I look to at least sync 2 of these time frames, because these time frames are telling me the overall direction of the market, what zones I'm going to be using to enter the market, and so on and so forth. So it's best to have at least 2 time frames in sync. It just higher your probability of that trade playing out in your favor, and it gives you more confluences. So now you have an idea of how each given time frame has its own structure. Now it's about how do you sync those time frames together. When it comes to syncing our time frames, it is simple as can be. It's nothing more, it's nothing less. I know this is a lot going on, but don't pay attention to the candlesticks, the magnifying glass, or the clock. Only thing you're paying attention to right now is flow to market, counter trend. That's simply it, right? So we have 2 examples for the flow to market. You have your simple break and retest, and then that continuation. But as we're looking for the break and retest to get established on this daily time frame, I'm also looking for the 4 hour time frame to do this exact same thing. The moment price gives us a break on the daily, you can see how this gives you a break on the 4 hour. The moment price gives you the retest of this daily area of interest, you see how in the 4 hour, we also have the retest. And then the continuation with the continuation. Both of these time frames are in sync, doing the exact same thing at the exact same time. And it's the same thing with the bearish example. You have the break, the retest, continuation. And these are happening at the same exact time. Stay with me, because once we get into the charts, it's going to be a lot easier when you identify these things. And then entry rule number 1. Price must always be below our daily area of interest when we are looking to enter that zone. And then entry rule number 2, wait for at least 2 time frames to be in line before we execute on this position. So we already know rule number 2. That's what we talked about at the beginning. Rule number 1, this will make more sense again as we get into the charts itself, the candlesticks. But what does it mean? It's simply identifying the daily area of interest, meaning if I go towards the Discord, there's 5 examples, bullish and bearish, where I look to enter my trades. These examples are performing or presenting itself on the daily time frame. I'm looking for the daily time frame to either show me the break and retest, the break underneath this area of interest, the rejection from our highs, rejection from our highs, rejection from our lows, right? But each given example, I'm looking to either be above my recent daily area of interest, below my recent daily area of interest, below, or above. Again, it will make more sense once we get into the charts, so just bear with me. I'm just showing you the gifs of how I trade and what it is when I mean getting below these areas. So the daily, again, I'm below this area of interest, I'm above this area of interest, above, below. It'll make more sense once we get into the charts. I'm going to say it all the time because I can only do so much, or you can only know so much when you're just looking at images. So this is the flow of the market. We have the daily and a 4-hour being in sync, which means we have the possibility of catching those trades. With a counter trend example, instead of the daily and a 4-hour being in sync, I'm looking for the 4-hour and the 1-hour to be in sync. You can see the 4-hour and the 1-hour, we perform the break, we perform the break, the retest, continuation. As far as the daily time frame, this is just showing us where we are at in the market. Keep in mind, I told y'all there's 5 examples for the bullish trend and there's 5 examples for a bearish trend. I'm either at the recent break on my daily, recent break, I'm either at my lows on my daily, as you can see, or I'm at my lower highs on my daily. This is the bearish example. As far as for the bullish example, I'm at the recent break, the highs, or recent higher lows, right? So when we go back to the counter trend scenario, you see on the daily time frame, I'm at these highs where I'm just looking for price on the 4-hour and the 1-hour to be bearish, although price is bullish on the daily time frame. On the second example, I'm at my recent break of structure being below this area of interest. Again, I'm still looking for the 4-hour and 1-hour to be bearish, even though we're bullish. Again, these 2 time frames are in sync. These 2 time frames are not. We're just using the daily time frame to take the trades off of the given structure point in the market. And then the last example, you can see how we are at those highs again, having that double top. We are bullish, but the 4-hour and the 1-hour are bearish, being in sync. And then for our bearish example, we see it there. We are at our lows. The daily is bearish, the 4-hour is bullish, the 1-hour is bullish, both time frames being in sync. At the recent break of structure, being bearish, 4 hours bullish, 1 hour is bullish. At the recent lower lows, double bottom, 4 hours bullish, 1 hour is bullish. So now I'm going to go through some examples of a bullish flow to market setup, how to get those time frames in sync, bearish flow to market, and I'm gonna go through probably 2 examples of the bullish counter trend scenario and then 2 examples of our bearish counter trend scenario. So give me a second. All right, so I'm gonna give y'all the flow to market with a bearish example first, and then I don't have any examples right now for the flow to market for bullish examples. So what we're going to do is we're going to use these examples, but we're going to flip it where they can show as a bullish trend. Again, I only went right here, I clicked invert scale and it flips the chart. So if I don't click invert scale, you can see it has no check mark. This is the original market structure, but if I click it, it shows you flip market structure. And then the way I have my candle set up, black is going up and then red is going down. These are my favorite colors. Well, my favorite color is red, but black is the logo, Alpha FX. It's all in, it correlates. So right now I'm gonna show y'all the flow to market. When we're looking for a flow to market setup, I'm simply looking for the daily time frame to perform this break of structure. And the moment price gives me a break of my daily lower low, because if you pay attention, what is going on? We had some type of higher high being here. We had this portion being our lower low on the daily time frame. We had this portion being our lower high on the daily time frame. I did a video for this. It talks about, I believe it's market structure, just going in depth about market structure. allowing y'all to get a better understanding. Go to the channel, check it out. So you would know what I mean. So right here, we come to see lower high, lower low. We then see price present us with a break of structure, which now gives us the new lower high being here. This turns into our break of structure, which I'm just going to mark off as our daily because that's what I do. And then we have no potential lower. Oh, we don't have a lower low just yet, because say if you did mark off your lower low like right here, price can continue like so. You'll be confused like, oh, I thought this was no. The lower low is when price has the reversal towards the opposite direction, showing you a push, pull, push, right? A pull is basically a retracement, a pullback in the market, and then a push is just an extension in the same direction where we're already heading in a bearish trend. What I'm looking for is basically the moment price give us that break of structure on the daily time frame. I want to see, and we're just going to drag this out like so. This is the daily time frame. I want to see my 4-hour time frame do that exact same thing. But like y'all know, each given time frame has different structure. So even though the daily time frame looks like this, my 4-hour time frame is going to look different. But as long as we're performing the break of structure and the break of structure is happening at the same time, I am a-okay. We have the daily break of structure happening here, and then we have our 4-hour break of structure happening here. But we have the last break of structure on the 4-hour time frame being here, which is going to make sense in a minute. I'm not going to jump into that right now, but I'm just showing y'all what I mean by being in sync. So now when I'm looking for the daily time frame to perform the retest of this structure break, I will also be looking for the 4-hour time frame to perform the retest of its last structure break as well. Again, you can see how both time frames will be doing the exact same thing. And the moment price gives us that pullback, showing the rejection towards our 4-hour zone, showing the rejection towards our daily zone, in order for me to enter a trade, I would then have to see price push back below, 1, my 4-hour area of interest, and then 2, my daily area of interest, because it shows me a clear direction of price continuing. Why? Because if we pay attention, if price was still above this zone and we're looking to take a trade, we can easily find rejection towards our daily structure point, even though we're below this 4-hour zone. Again, it's going to make sense once we get into these charts, but I'm showing you this for example purposes. Why? Because price can easily find support, find that rejection, and continue towards the upside, because this area was recently support, recently support. I want to see price get below, because now we break through that floor to where we can come back, treat it as resistance, and then continue towards that downside. The moment price gets back below this daily structure point, we also see it get back below an area where it was treated as support, an area where it was treated as support, giving us a added confluence of price continuing in our direction. So this is why you want to be below that daily structure zone. So for example, on the daily time frame, the only thing I'm doing is identifying structure, where if we had a recent break of structure, if we didn't have a recent break of structure. But since this is a flow to market setup, I know that we're going to have some type of break of structure, and I want the 4-hour to be in sync. So as I'm drawing out structure, I see that the daily time frame was in a bearish trend that then went bullish due to the breakout of this lower high, and then we see price present us with the breakout of these higher lows. So as soon as price on the daily time frame gave me a break of this higher low, I'm just going to mark it off as our daily structure. As soon as price gave me a break of this daily structure, we see that the 4-hour time frame, as we go towards it, did the exact same thing. Keep in mind, we see that the daily performed a break of this higher low. The 4-hour performed a break of where? That same structure point, due to it being the higher low on the 4-hour time frame. So boom, we see that same thing take place here on the 4-hour time frame. We see the 4-hour perform the break of structure. We see that the daily performed the break of structure. We now see both time frames, the daily and the 4-hour, in sync towards the downside. Remember what I just said. On the 4-hour time frame, what can we see though? If I draw out structure once more, we see that price had the break of structure, but the last structure break happened here. If we drag this out over here and I just mark it off, we see that the 4-hour had the break of structure here. We see that it had a lower high being here. And then we see that it had the last structure break being here. What is a last structure break? Well, it's simple. It is the last structure that was broke inside of the overall bearish move. So we know that price is bearish due to the breakout of this higher low, right? The continuation towards the downside. But the last structure inside of our overall trend happens to be here, which is also the last structure break. This is why we marked it off, because now as we mark that off, we can then use this zone as an area of interest, our entry zone, looking for price to pull back to, find rejection, and then have that continuation. And we just drag this back over here. What can we see? We see the break of structure happen around here. We can mark it off like so on the 4-hour. Break of structure, and then we see the last break of structure being here on the 4-hour time frame. We mark that off, last break of structure. So now we have the last break of structure, we have the 4-hour also performing the overall break of structure, and we have the daily time frame also performing that overall break of structure as well. So now we see that the daily and the 4-hour are in sync. Where can I see price pull back, have the rejection, and then have the continuation? If you don't know, I am a simple break, retest, continuation, meaning that if two time frames are in sync, I need both time frames performing a break and retest before I look to enter my trade, which means that on the 4-hour time frame, I'm looking for price to pull back towards my last structure break. Why? Because as I draw out this zone like so, I can also see, looking towards the left at previous data, that this was a zone of support, support, resistance, support, support, a well-respected area of interest. So knowing that this area was used as support, what is the possibility of price coming back, treating this recently used area as support, as newfound resistance to continue this move? It's pretty high. So what I'm looking for is the pullback on the 4-hour time frame towards the recent break of structure, which also will allow the pullback to get established on the daily time frame towards that recent break of structure, right? And if we fast forward, look how that happens. We fast forward, look how price pulls back exactly towards this area of interest that we marked off. It did that. And once we established a pullback on the 4-hour, if we go towards the daily, you see how the daily also established the break and retest of this setup. At the moment, where are we at? We are above our daily zone. We go back towards our image. We need price to be either below or above our daily area of interest. In this case, we are in a bearish example, so we need price to be below this daily area of interest so we can enter that setup. So right now, we see that the dailies perform the break and retest. We see that the 4-hour perform the break and retest. The only thing we're doing now is simply waiting for price to get back below this daily zone so we can enter this trade and ride it back towards the downside. So if I fast forward, boom. Price got back below this zone. With more confluences to help me enter this trade, such as our lower time frames, that is for a whole different video. Again, I made a video talking about how to put time frames in sync, the entry signals, and how to use those entry signals to get the highest risk to reward. Go check it out. Again, it's on the channel. But we found the entry once price got back below this zone, and look what happened. We hit our take profit with ease, and we were able to win this trade based off of the daily time frame and the 4-hour time frame being in sync. And what you need to know is that when the daily and the 4-hour are in sync, we use the 4-hour time frame to find our entry zone. The daily time frame, we're just marking off the recent break of structure. So the next example we have will be up here. We go back into replay mode. So same thing on the daily time frame. What can we see? We see that price performed the breakout of our lower low, continuing this move towards the downside. The moment price gave me a break of structure on the daily time frame, I went towards the 4-hour to see if we were doing the exact same thing. On the 4-hour time frame, you can now see how structure is a little bit different, but it's doing that exact same thing, giving us a breakout of our recent higher low. So we see that the daily time frame presented us with the break of structure. The 4-hour time frame presented us with the break of structure. We have both time frames being in sync. And so now what do? Since we know both time frames are in sync, I need to find my entry zone based off of the 4-hour time frame, our secondary time frame. We always find our entry zone off of our secondary time frame that is in sync. So on the 4-hour time frame, if we're drawing out structure, right? I'm drawing out structure. I see price go from this bearish to then bullish trend due to the breakout of this lower high. And then we reverse back to a bearish trend due to the breakout of this higher low. The moment price gave me a break of structure around here, I then marked this off as my area of interest, aka my entry zone. And then if I look towards the left, we have treated this zone as support, 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 resistance around here and resistance around here. So again, what is the possibility of price pulling all the way back to treat this area as resistance? It's pretty high because when price is above, we're treating it as support. We recently just got below that zone. I simply want to see price now treated as resistance. So I'm looking for price to pull all the way back towards our 4-hour entry level. And then also, once price has that pullback towards the 4-hour zone, this will allow the daily time frame to perform a break and retest of that zone as well. If we fast forward and we look for that pullback, as soon as price taps back into, we now see the break and retest get established. We also see that the daily time frame performed the break and retest as well. Yes, we're above that daily zone, but that is perfectly fine because this is allowing the 4-hour time frame to have the retest of the recent break of structure. Now we simply wait for price to get below this daily zone with added influences to help us enter this trade, and let's see what happened. Boom, price got back below our zone. We found our entry and we go directly towards targets. As simple as day. We sync the daily, we sync the 4-hour, and we simply wait for the break and retest to get established on both time frames. After that gets established, we then wait for price to get back below our daily structure point, enter that trade, and ride it towards the downside. Now I'm about to flip this so I can show y'all that example of the bullish. I'm going to flip this so I can show y'all the example of the bullish market, and then we're going to get into counter trend setups. So starting off on the daily time frame, what can we see? We see clear as day price give us a break of structure heading towards the upside, breaking past these higher highs. As soon as price gives you the break of structure, go towards the 4-hour time frame and see if we're doing the same thing. On the 4-hour time frame, we see exactly that. We see that price perform the break of structure around here, going from this bullish to bearish to then back bullish due to the break of structure of this lower high. So now I will be looking for price to pull back towards this area of interest. Since this is my last break of structure, I marked it off as my entry zone, and I want to see price perform the break and retest before having a continuation on the 4-hour, which will also allow us to have that break and retest, like you all know, on the daily time frame as well. So if we fast forward, again, we see price pull back towards that zone perfectly, and then after we pull back towards this zone, what happened next? We saw the daily time frame do that exact same thing. The break and retest of its setup. Yes, we're below, but we're perfectly fine because this is allowing price on the 4-hour to have the retest of the recent break of structure. So now, how do we get find our entry? We simply wait for price to get back above our daily structure point, and we enter this trade to ride it back towards the upside. What happened? Enter the trade once we got above, and then we hit take profit with ease. Give me a second. I'm gonna fast forward to the other example, and then we're going to get into counter trend trades. All right, so same thing, right? On the daily time frame, we see price perform the break of structure towards the upside, breaking out of that lower high. As soon as price gave us the break of structure, we went towards the 4-hour, and on the 4-hour time frame, we see that price was doing that exact same thing, right? We see that the break of structure happened to be around here on the 4-hour, but the last structure break was around here. So now I would be looking for price to have that pull back towards this zone, since we recently used this zone as resistance, 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 minor support around there, but ultimately this zone has been used as resistance. So the possibility of it getting used as support, since price has recently broken back above, I would say it's pretty high because we have multiple rejections of resistance. We really have 2 or more rejections. I only look for 2 or more rejections towards my entry zones to use it as an entry zone. And we obviously see we have well over 2. So if we fast forward, we allow price to have the pullback towards our last structure break. We see price do exactly that. And as soon as price did that on the 4-hour, on the daily time frame, it also allowed the daily to perform the break and retest of its own setup. Again, yeah, we're below, but this is only because we're allowing price to have the retest on the 4-hour structure break. And now to find our entry, wait for price to get back above our daily structure zone. What do? We wait for price to get back above our daily structure zone. We got our entry and price hit our targets with ease. Simple as can be. Sync in 2 time frames using your secondary time frame that is in sync to find your entry signal. To find your entry zone. And then once you do that, if you are below the daily structure point, simply wait for price to get back above or back below and enter that trade or ride it towards the upside. So now I'm about to show y'all some examples of counter trend setups. These are my favorite because, as you can tell, these are the only thing that I take is counter trend trends. And then sometimes we take Florida market, but it's typically been counter trend setups. And then you can obviously see over here, we have our win-loss ratio, a whole bunch of stuff. If you want to see the breakdowns on all the losses and you want to see how we're at $93,000 right now, I will recommend you go to the Discord and you check out the post-trade breakdowns. This is where all this takes place. I break it down even further, how we mess up, why we're messing up, and basically how we fix it. So now let's get into these counter trend setups. All right, so this example is going to be a sell on Euro GBP. This will be showing you the example of being in a bullish trend on the daily time frame, but price gets back below that recent breaker structure, use it as resistance, and then have that continuation towards the downside. Looking for the 4-hour and the 1-hour time frames to be in sync. Starting off, I know it's a little choppy and a little ugly. I'm gonna draw it out and then we're gonna mark it off like so. On the daily time frame, we see clear as day that price was in this bearish trend that then went bullish due to the breakout of this lower high. As soon as price did that, we then see price have this retracement take place on the daily time frame. And if I drag this over here, we see what? We see that the daily time frame performed the breaker structure around here. We can mark that off as our daily. We have that higher high being here, and then we have that higher low being here. And on the daily time frame, we see clear as day price perform the break of structure. Instead of having the retest of structure, price gets back below this daily area of interest, which now puts us in a counter trend scenario. And it only puts us in a counter trend scenario if the daily and the 4-hour time frame are not in sync. Keep in mind, when we mean in sync is when the daily presents the breakout, the 4-hour would be presenting the breakout, and then when the daily's presenting the retest, the 4-hour will be presenting the retest. But in this example, this is not taking place, and I'm about to show you why. So we can see clear as day that price is back below this recent daily structure break, aka the area of interest on the daily time frame, where we can now potentially see price pull back towards the zone, treat it as resistance, and then have the continuation towards the downside. So if we drag this back over here, what can we map out? We can map out the daily recent breaker structure. We can map out that daily higher high, but instead of me using that, like I said, I like to use my line charts. So I'm gonna use this right here, and then I can map out my daily higher low, which is around here. So this is exactly what the market was looking like when we were looking to take a trade. And if I just actually delete this daily thing, and then we're gonna add our original daily structure break, this is exactly how I had the market drawn out. So the moment price got back below my daily area of interest, I went to the 4-hour to see if we were doing some type of break and retest. On the 4-hour time frame, we see that is not the case whatsoever. We go back towards the daily, we see that the daily is bullish when performing this pullback in the market, but the 4-hour, we are bearish performing the break of structure in the market, which puts us out of sync with the daily time frame, and possibly the 4-hour can be in sync with the 1-hour time frame. So on the 4-hour time frame, we see that price presented us with the break of structure happening around here. On the 1-hour time frame, we see that exact same thing taking place around here. So we see that the 4 hour is bearish, the 1 hour is also bearish, performing that break of structure. So like we just said, the secondary time frame that is in sync, we use to find our area of interest. Right now, we see that the 4 hour and the 1 hour time frame is in sync. My secondary time frame is going to be the 1 hour time frame. And how do we find our area of interest? Well, we just look for the last break of structure. As we're drawing out structure, we see what? We see that price went from a bullish to bearish trend, right? We see that the break of structure happened to be here on the 1 hour time frame. We have that lower high being here, and we have our last structure break being here. Again, y'all, the last structure break is simply the last structure that was formed inside of our overall trend. Where was that at? It was right here. So we know that the overall trend is bearish due to the breakout of this higher low, and the last structure break is around here due to this being the last structure that was also broke inside of our overall trend. So now if we drag this back over here, I don't know how I had it all. Oh, it was right here. Wait, it was right here. Looking at this, we can then mark off the last break of structure. We can mark off our lower low on the 1 hour time frame, and we can mark off that lower high on the 1 hour time frame being here. And then we have what? Oops, let me delete this. We also have that box area, our entry zone, due to that last break of structure. And we've looked towards the left. We see that this is a well-respected area of resistance / support. Price has recently got back below this area of support, which I want to see it get treated as resistance once more. So for us to look for the retracement right here on the 1 hour time frame, this will also allow the 4 hour time frame to perform that retracement as well. Both time frames performing a break and retest. So if we fast forward, allowing the 1 hour to have the retest, boom, we see that the 1 hour time frame has the break and retest now being established, which also allowed the 4 hour to perform the break and retest. And if you all take a look, where are we at? Below our daily structure point. So now, since we're below the daily structure point, we see both time frames perform the break and retest. We simply just look for our entry signal. And once we have that entry signal, we enter the trade. And what takes place after? Well, we go directly towards targets with no problem. Why? Because we were able to sync 2 time frames, and we were able to see price respect that daily structure by being below that zone. So now I'm going to show you an example of the setup number 1, where price gives us the recent break of the structure, and we're looking to take the trade from these highs, basically getting in on the retracement on the daily time frame back towards the downside. So give me a second. All right, so now here's an example of, like we just said, setup number 1, where on the daily time frame, we just recently performed the break of structure, and the 4 hour, instead of being in sync with the daily like we would be on the flow to market setup, this is a counter trend setup where price presents us with the break, and as we're forming a retracement on the daily, I will be looking to catch that counter trend setup, since the 4 hour and the 1 hour will be in a bearish trend. So when we mark this off on the daily time frame, we see clear as day that price is bullish, right? We have the higher high being here, we have that higher low being here, and we have our recent break of structure being around here, which we mark off as our daily structure. We see that price is bullish. And as price is bullish, we not only form rejection towards these highs, but price forms this beautiful bearish engulfing. If I take away, we see that the second bearish candle engulfed that previous bullish candle, showing us that engulfing candlestick. This is another sign that price might be bearish on the 4 hour time frame just due to candlestick formation. So on the daily time frame, I see that price performed the break, and we're now looking like we're having a retest of the zone to continue towards the upside. So let's see what the 4 hour time frame is doing. On the 4 hour time frame, however, we are not in a bullish trend. We see price recently perform the break of structure around here. So now we see that the daily is bullish and the 4 hour is bearish, which puts us out of sync, and I'm not looking to catch a flow to market trade. This would be a counter trend scenario if the 1 hour is in sync with the 4 hour time frame. So on the 4 hour, we see that price has recently performed this break of structure. Let's see if the 1 hour is doing the same thing. On the 1 hour time frame, we're doing exactly that. On the 4 hour, we recently performed this breaker structure. On the 1 hour, we have recently performed the breaker structure as well, happening around here. So now, knowing that the 4 hour and the 1 hour are in sync, I want to use that secondary time frame that is in sync, aka the 1 hour, and find my area of interest, or my entry zone, if you will. So on the 1 hour time frame, if we draw out structure, we see what? We see price go from a bullish to bearish trend, and the last breaker structure happening to be here. So now mark this area off like so as our entry level, right? So we have an area of support, 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 resistance. So now I want to see price on the 1 hour perform the break and retest of this recent structure break, which will also allow the 4 hour to perform the break and retest as well. So if we fast forward, what can we see? We see clearly that. We see price perform the break and retest of this recent structure break. We also see price attempt to break past this lower high, but as long as a body candle does not close above these body candles, giving us that breaker structure, we are A-okay, which in this case, it never happened. So as soon as we had the break and retest on the 1 hour, we see that the 4 hour also performed the break and retest as well. Yes, we're above the 4 hour zone, but I'm not too worried about that since I'm using my 1 hour as my entry zone. And if you pay attention, if I go back towards the daily time frame, we see that we're still below this daily time frame structure while showing signs of rejection on the 1 hour time frame, right? So now it's about us getting back below our entry zone to find our entry. Again, you want to be below your entry zone and below your daily structure when we are looking to enter this trade. We're already below our daily structure, and now we're simply waiting to get back below our entry zone. If we fast forward, what happens? We get right below our entry zone, we find our entry, and we simply ride this trade towards the downside. So now I'm about to show y'all an example of price being bearish on the daily time frame, and we're catching counter trends back towards the upside, and then that's going to be it for this video. So give me a second. All right, y'all, so last example on the daily time frame, what can we see? We see clear as day that price is bearish, and then price gets back above our daily structure point. But on the daily time frame, it just looks like a simple break and retest that's going on. Well, as soon as price gave us the break, the 4 hour time frame, we did not do that. On the 4 hour time frame, we see clear as day that price is now going from this bearish to bullish trend. So right now, I see that the 4 hour is bullish, which means that we're out of sync with the daily time frame, which is bearish. So knowing that the daily and the 4 hour are out of sync, the next thing is to find out if the 4 hour and the 1 hour are in sync. Well, the 4 hour is bullish, and it just presented us with the breaker structure towards the upside. On the 1 hour time frame, it's also bullish, doing the same exact thing. We also see the breaker structure towards the upside. So we see the 4 hour and the 1 hour in sync towards the upside. While the daily, we are bearish, but price is getting back above this daily structure point, aka being in setup number 2 when we are bearish. You see how price is bearish, but we get back above our recent breaker structure to treat it as support. 4 hours bullish, 1 hour is bullish. That is exactly what's going on. We have the break, we're back above, possibly treat this area as support. 4 hours bullish, 1 hour is bullish, right? And since we know that the 4 hour and the 1 hour time frame is bullish, the secondary time frame that is in sync is the 1 hour. So we use the 1 hour last structure break, which happens to be around here, because we see the overall breaker structure happen here, but the last structure inside of our overall trend is around here. So I'll be looking for price to pull back towards this area of resistance / support, which is also in sync with the daily structure point. So if we fast forward, boom, as soon as price gives us the once price tapped back into showing signs of rejection, this also allowed the break and retest to take place on the 1 hour, also allowing the break and retest to take place on the 4 hour, and we can possibly now see our entry come along. Why? Because we're already above our daily structure point and we're above our entry zone. So now we just simply look for our entry signal. And what happens? Find our entry signal, ride this trade back towards the upside, towards targets for a 3.24% gain. Now you see the difference. It's not about taking more trades, it's about taking the right ones, especially when your time frames are in sync. This is what I use every single week. And if you are not syncing your time frames, you're simply just guessing. Remember, no setup equals no trade. I'm gonna catch y'all in the next one. Deuces.